part of the Aon Infrastructure Solutions. It's a group at Aon that we created about 5 years ago, specifically to focus on providing risk advisory and insurance brokerage services on public-private partnerships. I'll be brief because I think I'll echo a lot of sentiments that people have already said, but I want to touch a bit on how we're seeing the current P3 market in the States, and then I also want to talk a bit about the importance of risk transfer in driving the value in public-private partnerships, as well as the importance of really assessing what those risks are, which entities ultimately are responsible for managing those risks, and what you can do to make sure that the entire consortium has a common understanding of where the risks lie and the insurance and performance security solutions that might potentially be out in the marketplace that'll help you to further mitigate those risks. And this is probably a bit difficult to see, but what this graph shows is the US P3 market over the past 10 years. I think one common question that people always have is the P3 market in the US real or not? People have been talking about it for a long time, and we have success stories out there certainly, but overwhelmingly those projects that don't ever get off the ground or get canceled sometimes during the procurement process kind of take center stage and kind of I think lead people to really question whether they believe that the US P3 market is real. I share the sentiment of the guys up here that it truly is a real market, and at Aon we're certainly bullish about the future of these types of projects, and in the next slide I'll tell you a little bit more why. But what this graph shows is the number of greenfield P3 projects that have reached financial close over the past 10 years or so. In 2015 in the US, we believe that 10 large infrastructure P3 projects reached financial close with a total construction value of about $5 billion. As a quick plug, I'll say that Aon was partnered with 6 of the preferred bidders on those projects as a risk advisor and insurance broker. So we're touching the vast majority of the P3 projects that we're seeing in the States. That last bar there is our projection for 2016, and that's based on infrastructure projects that are currently in procurement. So we believe about 7 projects in 2016 will reach financial close, and they have really large capital values. We're anticipating somewhere between $6 to $9 billion in capital value. So very large deals that are getting done. We believe that that's going to continue to be the trend. This pie graph here breaks down the projects that are out there in the US market being talked about. They're either in procurement or being discussed within procurement agencies throughout the US. That red slice is transportation projects. I can tell you 3 or 4 years ago, that entire pie was red. However, I think as people in the market in the US specifically continue to get educated and become a bit more sophisticated with the model, we're seeing P3 start to creep into other sectors, particularly social infrastructure, water infrastructure. We're very bullish on higher education at Aon. We think that as more and more P3 projects reach close, that these projects are going to start to creep into other sectors beyond just transportation, which is, when you think about the P3 model, is probably what you think of, because that really has been the hallmark kind of asset class for P3 in the States. Oh, I wanted to say one thing. In 2015, we said that 3% of infrastructure projects in the States were P3. This actually very closely aligns with Jeremy's assessment of 1%, because we're really only looking at infrastructure. So very much in line with your research.
You got it right.
Yeah, I think so. Jeremy mentioned, so some things to keep in mind in the States. Jeremy mentioned that the majority of states have some sort of legislation in place that enables them to procure these projects. Up here we state that 11 states have social enabling legislation. What this means is that at the state level, there's some sort of specific legislation in place that would allow higher education, other types of municipalities within those states to procure social infrastructure like projects. Social infrastructure is a bit of an interesting sector though, because it doesn't necessarily have to be the case that legislation has to be in place for these projects to take off. In many states, like Illinois, there are things like home rule, where municipalities are able to procure these types of projects with or without state-level enabling legislation. So a couple of challenges that I just want to talk about that should be considered when thinking about the P3 market. Obviously, like I mentioned earlier, we've heard about a lot of projects like Ileana, for example, that have started through the procurement process and for one reason or another have been canceled or delayed. Obviously, this is a huge risk to the private sector bidding companies who spend a tremendous amount of money forming their teams and starting to go through this process. So it's a huge challenge in the U.S. And one thing that we've done at Aon to start to help our clients to think about the states in which they're starting to chase projects is we piloted a project called P3 Point. This was led by Kate Goshal, who's in the audience, so please ask her about it. But what we did was we created a model that would assess political and regulatory risk by state that would help our clients to get a better sense for where they should be pursuing projects. So what we did was we did an analysis assessing 16 different factors that basically scored states based on their P3 friendliness and readiness. And among the various things that we assessed were enabling legislation, like I was just talking about, but also, is there a political champion in place, and other things like that. So I think we came up with some really cool results from that, and have a real model in place for people to be able to start thinking perhaps a bit more systematically about where they're pursuing business. I want to really emphasize again what Rick was saying about risk. It's risk transfer that's driving value to the public sector in these types of projects. We've heard over and over and over again that the P3 procurement model isn't a silver bullet, it's not a free project. But what happens is that when the private sector entities come in and are willing to design, build, finance, operate, and maintain the assets over a long period of time, anything that could potentially go wrong during that period of time is up to them to fix. And so that risk is transferred away from the owner and onto the private sector to manage that. And I think, again, like Rick was saying, when the private sector is putting up capital and their equity distributions directly rely on the project going smoothly and these types of hiccups to be avoided, I think we see, and the data proves this, is that the projects are getting done on time, on budget, being operated and maintained to a higher degree of standard because their equity is on the line, and that repayment, it depends on it as well. What's something that we spend a lot of time focusing on is not just what risk is being transferred from the owner to the concessionaire, but then also taking a consortium level view to really assess, after that initial risk transfer to the concessionaire, what happens then? Is that risk from the concessionaire then passed on to the DBJV, the design build joint venture? Can that risk be further transferred onto the insurance markets, et cetera? And so I think it's important to keep in mind that it's not just a one-step risk transfer, but there are many, many entities, many parties involved in these consortia that could potentially be responsible for managing the risk. Rick talked a bit about a project risk assessment. This is a sample of one that I recently did for the Maryland Purple Line project. And the only thing I really want to say about this is that there are many risks in the agreement that are just full out passed to the concessionaire. So cost overruns, there's no time relief, there's no compensation relief. That is a risk that will ultimately be held by the private party. There are a lot of other risks, though, like force majeure events, for example, that are shared between the public sector and the private sector. And I think one area where we really focus on are those shared risks, because to the extent that a risk such as of terrorism, for example, or named windstorm is a force majeure event, that is passed and where time relief is baked into the concession agreement, a lot of times compensation relief is not. And so those are risks that are readily, I shouldn't say readily, but are absolutely insurable and can be passed to the insurance markets. And so those are the types of risks that we really need to take a deeper look at to see how cost effectively we can transfer those.